Today, we're going to talk about the rental data that just came out. You see a lot of headlines. It says national rents are down over 4% year over year. And like I've talked about before, but I think it's very important to look at region specific and kind of what's driving that. If you look at the top declining rents, Vancouver, Toronto, almost all of them are in either BC or Ontario. And look at where those rents are, right? They're still very high compared to Alberta, Saskatchewan, Manitoba, even Quebec. I think Ontario or Toronto and Vancouver, the rent is about $4 per square foot. Edmonton is $2.15. So we're about half the cost to rent a square foot of real estate. Here, it's important to look at the economies, the people that are going there. Even Edmonton and Calgary are quite different, right? Like, I think you'll see rents probably come down in Calgary a bit, whereas I think Edmonton, we still have room to go up. It's what type of people are moving there. It's kind of that middle class, $80,000 to $140,000, goods producing jobs that are coming here that are still high in demand. They're not service jobs like some of the, maybe more sexy, higher earning people that go to Calgary, Vancouver, Toronto. Those are the ones that I think will get hit first. And I think that's why you're seeing rent start to pull back in those really high rent areas. I do wonder too if some of this flattening out or even trend down is due to the fact that we had 38 straight months of rent increases in Canada, and now we've seen 4 months of slight decreases. And I think there does just become a point where it becomes unaffordable. I think you've seen that in Vancouver and Toronto, where you can have a really, really good paying job and you can't afford to pay rent. So I think they'll always push as hard as they can. Rents will always go up as high as they can. And then there's going to be that flattening out. Maybe even they'll come down a bit and then they might start going back up. But until wages start catching up in those areas, which are a huge bulk of what makes up the, Ontario and BC have so many cities that when their rents start to come down, it does draw the national average down, even if you're not seeing those rent decreases in Alberta or Saskatchewan or Manitoba, where rents are still really affordable for most people. So I think it's just part of it where we probably hit a ceiling in the really big markets. And we're going to have to see that catch up to wage growth now. I think a lot of the rent increases, you can look back to 2020 and, kind of correlate that with how much immigration opened up and how many people moved to the country over the last couple of years. And that just ate through all the supply. Some of it was probably based on lower interest rates. So we built more, but that took a long time to come on. And now the supply is coming online. You're seeing condo sales aren't great in the bigger cities. Vancouver has more condos listed, I think, than ever before. And that's kind of a product, I believe, also of higher interest rates. You just can't afford to buy them, right? It's kind of similar to what I talked about with the rents going up so much. There does become a point where people just can't pay their rent. So they're going to move to more affordable cities or maybe outside of the downtown area and get somewhere where it's cheaper because they just can't do it unless wages catch up. Even smaller areas like Calgary and Edmonton were just really different cities. And it's kind of interesting talking to landlords in Edmonton. It seems like there's a lot more where they'll say, oh, we got rents up $50 or we're going to get rents up $100, more than 1%, right? Where in a lot of cities, the landlords are going to talk about, we're going to try to push rents 10% or 15% or 8%. And I think in Edmonton, because rents have been they had been flat for so long, it seems like people use the dollar amounts a lot more, like $50, and they don't really think that that's probably only a 4% rent increase and maybe the market's 12%. So there's little nuances like that where if you're in a local market, you kind of see it. I still think Edmonton's really affordable even compared to Calgary, and that's why we'll see rents go up more here and maybe come down a little bit in Calgary. And again, it has to do with the type of jobs that are moving here. They're goods producing. They're jobs that are going to be here through recessions, that they don't come and go quite as quickly as maybe some of the white collar jobs that would move to Calgary, Toronto, or Vancouver. So you can see the average rent in Calgary is $1,900. In Edmonton, the average rent is still $1,500. Edmonton's up 3%. Calgary's down 6%, but there's still a big gap there, right? When I moved to the city, they always said Edmonton trails Calgary by, 6 months to a year. So ideally, we would, as a landlord, I'd like to see the rents here get up to that $1,900 average. That's a long ways for us to go. I don't think we'll get there anytime soon. And I think Calgary will flatten out and probably start going back up as well. One reason too that might impact the rents going up in Canada, or we might be starting to see the repercussions of when MLI Select first came in. A lot of that program was tied to affordable rents. You had to lock a certain amount of units in. That came in about 2022. So we could start to see that where some of those rents that, maybe they would have went up more, and they're, if you bought a building and put 80% of the units into that program, they're capped at whatever the government tells you can raise rents. So that might be having some impact. I think that was the idea of the program, and maybe it is working to some degree now, where you're seeing a lot of the units that have been financed in the last couple of years are only allowed to raise rents as much as the government says they can. And that might have some impact on why rents are coming down slightly as well, which I think was the government's intent when that program came out. So thanks for listening for today. We'll see you guys next week.